Hello, this is the Chart Profit webcast. We're approaching 3 hours into the trading day. This is from the pre-open yesterday on Thursday. Looking at the E-mini S&P the last few days and weeks, said that the E-mini has become ever more focused at 20.95.50, and said previously that the more longer term controlling price could move to that level, and that's actually what happened. So the 10-month control price has now migrated to that level at 20.95.50. That is now the level to monitor, and that's the major support. It's here on the chart. Now looking at the pre-open today on Friday, here's yesterday's price action. I said on Thursday that migration of an important point of control often precedes a directional move. I said the 3-month consolidation the S&P's been in may well be about to end. My hunch is higher, but we don't know. And I said that either way, aggressive buying marked above that level or aggressive selling marked below that level would most likely follow on. And actually on Thursday I did mark aggressive buying up here, so I'm now assuming higher, which means breakout from this consolidation, and there's the support at 20.95.50. Price back below that level would put this breakout either on hold, which would mean further time and consolidation at that level, or this is a bull trap and the breakout doesn't happen. So let's hope the E-mini holds above 20.95.50 and we see it higher, and we're seeing some positives. Said there's been a marked rise in bearish sentiment this week, but we've seen improvements in price location, price momentum and breadth numbers. They're all improving. First of all, let's just quickly review what's happened. This is a 30-minute price distribution for the E-mini back to October. The controlling price was at 20.45, and we've had this consolidation up here, and as you know, we've found support, which is quite common around that level. It probes into it but rejection, so there's the consolidation. Over the last few days we've seen that controlling price move higher up to that level in here. So on the left hand side here on the stack profile, you can see here it's moved up from here to here, and this is now the big level to monitor. Just to make sure that this is a bull trap, I'm going to start talking about forecasts and targets. So I'm seeing 22.20 on the S&P E-mini future up here. This is what the current distribution suggests. That would change. First thing we see this failure below 20.95.50. See some more time down here somewhere, so we see this controlling price migrating back down. That would cause a real problem and negate that target level. So the breadth have been improving. This is the New York daily breadth chart. Percentage stocks greater than the 50-day moving average at the bottom here above 50, which is encouraging. I'd like to see that. And the net new highs 25 indicate a 5-day moving average in yellow. We'd like to see that back above 0. So these two indicators together currently giving us a neutral reading here on the breadth on the pulse chart. If we see that net new highs indicator picking up, we could get back to green, which would be encouraging. Price momentum is just leveling here around the 0, but better obviously if that starts heading up as well. Looking at the live chart here in Metastock Pro, E-mini S&P, we're looking at an hourly chart. A controlling price moved higher somewhere in here, and encouragingly we've seen price moving higher away from there. So we need to see this level hold on the E-mini. Big level on the spider is 207.92 in here. I do not want to see price printing time below that level. As we know, the Russell 2000 ETF IWM has been lagging somewhat. You can see that on the chart here. So we're quite a way below the April high, and just holding 122.35, which is the critical level. It's the 3-month controlling price, so I don't want to see time below that level now. Probably rather see the small caps leading. It's the large caps. This is the diamonds, the Dow ETF. And this 9-month controlling price at 176.47 is the level, and that has been probed and proven support now. So Price, should we see it back below that level, would suggest a test of this level down here at 170.35. Going to next week, of course, we want to see price breaking out here. Let's take a look at the sentiment indicators. I said in the pre-open that there'd been an increase in bearish sentiment this week. This is the, on my version of the Ridex assets ratio in the bottom here with the S&P above. Seems like the Ridex retail traders are not too enthusiastic about the possibility of a breakout here. So the ratio heading lower over the last good few days. I mentioned recently that when we look at the bear fund assets that I follow in isolation, they've been dangerously close to this extreme low, hardly any bears at all, but we've seen a bit of a rally in that data again over the last few days, so it's a little encouraging. And the bull fund assets in isolation that I follow actually just in the last couple of days hit a 6-month low, so that's again encouraging, quite a way down from the peak in the bull fund assets back in November that I marked here, which has probably led to this long period of consolidation in here. Just too much excitement at this point. It looks like we have some fuel here. Okay, the public poll from AAII, this week's data shows that the bulls percentage was slightly lower at 26.7. The point I'm making here is that that's actually a 2-year low in bullish sentiment. Again, that's fuel, that's quite encouraging. Bears percent was also slightly lower at 26.4, but that's the important bit, a 2-year low in the bulls here. And in the investors' intelligence data, again, bulls percent, that was lower, 47.5, and that's a 6-month low. Also, bears percent was higher at 15.8. So the net, that's bulls minus bears at 31.7, that's a 3-month low. That's this number over here. In the longer term, we'll watch the 4-week moving average of that net, and particularly relative to this level here, which is the previous peak. Okay, now we're looking at active money managers. This is the exposure index, and that again sharply lower at 60.38 from 80.23. That's a 6-month low. This measures current equity exposure of active money managers, so that's quite a fall. So there's been an increase here in bears. Finally here we're looking at data from Lipper US fund flows. They reported equity fund, including ETF inflows, 3.7 billion this week to the week 13th of May. Just to remind you, we went over this last week. The previous week's outflow at a negative 14.8 billion. That was the largest single weekly outflow since December the 19th. So summing up the sentiment, Lipper data here, largest single weekly outflow previous week since December. Public poll, AAII, 2-year low for the bulls percentage. Investors Intelligence, 6-month low for the bulls percentage. And the exposure index, that's active money managers, that was also at a 6-month low. So this is fuel. Increase in bears, that means that if the market does break out, if there's bear fuel, that means it might hold. But I reiterate, most important thing is price, and price on the E-mini, for instance, must hold this level, 2095.50. Don't mind a little correction back here for a few days, but this level's got to hold. Okay, so we've seen migration of the controlling price on the S&P futures, and as I've said, that often precedes a directional move. If you remember back in the middle of April, about here, I said there was a possibility of the controlling price, 6-month controlling price for the TLT, the T-bonds, moving to 129.80, and that's what happened. We had then a little pattern below there, and then I said this could be real weakness, and then we saw TLT fall like a stone. Big support is 117.14 down here. Having a little bit of a bounce at the end of the week here. Price below 117.14. Extremely weak price location in the longer term, and that would suggest further weakness. So GLD, the GLD, the gold ETF. Bit busy on here, but I haven't changed the levels for months. 115.12 down here is the 18-month controlling price. We're above that. That's a better price location, slightly stronger. The next level of resistance that we've been talking about is this half range level here, off this low to this high, and That's just kind of obvious chart resistance. It's currently straddling a little there. Price above that would suggest a test of 124.12, which is the big level. Let's see if we can manage to do that early next week. This is the dollar index. 94.67 is the big level that I'm watching on this chart. Currently, this is weak price location for the dollar. So this 12-month point of control migrated higher around here in February. So it's been at least 2 months since we've seen price below that support. Current levels, I want to see price back above there to talk about further strength for this chart, unless of course this level migrates. So let's look at some other charts for clues. Read the dollar. This is the Aussie dollar against the US. Been watching this level for a long time. This is spot 79.25. It's major half range. Proven resistance over here. Chart is trying to move into a position of strength above that level. So stronger chart, I wouldn't short above that level. Indication of weakness for the dollar. This is a much longer term chart. We're looking at a weekly chart here for the British pound dollar, and we're looking at the same levels that we've been looking at for a while. Here, the major half range at 158.80, and really major controlling price at 160.37. So this would be a band of resistance here, and had a good week post the UK election and approaching that level here. Price above that band of resistance, above 161, that would be a real sign of strength for the pound. Not until. And here the Euro FX chart, even longer term. This is a monthly chart, goes all the way back to the 80s, and we're looking at the level from this low to this high, and there's the obvious halfway point support resistance. We're currently just printing just above that level on the daily here. So Aussie dollar, euro moving stronger against the dollar might indicate some weakness for the dollar. The pound dollar might give us a clue, and we'll closely monitor this level on the dollar index chart itself. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.